Okay, Siliyewe is the head of research West Africa for Exotic Partners. Exotic Partners is based in London, but he's here with us in the studio to talk to us a little bit on some of the Nigerian companies' earnings that you've seen. Well, let's stick with the industrial manufacturing. Good afternoon. Thanks for coming. Give us a sense of this earnings that you've seen, especially from industrial manufacturing, whether they're cement, from Dangote Cement to Dangote Sugar, Lafarge, just talk about the big boys, Unilever, and the rest.
I'll say the trend broadly has been weak, and that was kind of expected given the relatively weak macroeconomic backdrop. However, I think specific to the consumer sector, we've seen a bit of a relatively stronger trend year on year, but that mainly reflects a lower base in the previous year during the same period. Now, to obviously, I guess, add context to that, what I'm trying to say is that in the first quarter of 2015, what we saw was quite a destocking in the market of consumer products ahead of the elections. Essentially, what was happening was that in some cases, the distributors were quite worried about the political climate ahead of the elections, and we decided to probably stop or reduce, slow down trading, or in some cases, basically trading or switching that money out of trading consumer goods into trading the currency.
Because they got some cash flow.
Yeah, it was probably easier making money trading currency at the time than trading consumer goods because consumer spending was weak at the time, was slow. So I imagine that there were quite of those distributors that found it a lot more profitable doing that. But then coming to sort of core manufacturing, industrials, like you mentioned, the cement companies, it's been significantly weaker year on year. On one hand, you have Dangote that has reported performance that basically reflecting, coming off a high base effect. There was a high base effect in exceptional gains in the previous year, financial year. But then on top of that, you had quite a decline in cement prices over the last year that has basically translated into much weaker operating profits, more than offsetting the substantial increase that we saw in cement volumes in Nigeria.
Are you worried about a bit of not really profit warning, but a bit of outlook from some of these companies? Look at Unilever, for example. Say, look, 2016 to 2019 is going to be really difficult for us in the Nigerian environment. What do you make of such statements?
Well, I think that sort of cuts across the board. It is very challenging, as I'm sure it is for Channels Television's business as well. So I do believe that they will obviously have to work on, I guess, consolidating the market, managing operating costs. In some cases, probably raising prices. We've started to see prices already going up as we speak. So I think that, they're just going to try and manage it. But I think very essential to appreciate is that you're going to see consolidation in the sector, not just consumers, manufacturing, across the board, even banks, because what you simply have is a lot of fringe players or smaller players finding it more difficult to compete, and the bigger players just become even bigger.
If I'm an investor, should I judge Nigeria's industrial, perhaps fast-moving goods companies like Unilever and the rest of them on the basis of the current earnings? In other words, if you look at 2014, 2015, this trailing earnings, is it a basis for me to say, look, there's still value in the stocks, or I should think of doing something else with my money?
It clearly isn't. By that, I'm not saying that Unilever is particularly attractive. We believe that Unilever still has a long way to go in terms of recovery. If you looked at the first quarter numbers, they were up about 76% year on year. Remember, I pointed out that some consumer companies are seeing a relatively better trend because they're coming from a relatively low base comparable. So, yes, it's not, I think, a basis to judge, to whether you want to invest in Nigerian companies or not. I think that therefore, for a number of stocks, even in the banking sector, consumers, this is still very attractive levels for you to get in. And just to quickly highlight in consumers, we like UACN. We think that UAC is currently underpriced. It's trading about roughly 8 times its historical and current book.
US's earnings came in about an hour or two ago. First quarter, a bit on the sluggish side.
They're weak, but like I said, so is everyone else. Yeah. So in my view, they weren't too bad numbers. They reflect a pretty poor performance in the property business. That business particularly recorded losses, and also weakness in the paint business. Clearly, with limited construction or weaker construction activity, there's no one buying paint, right? So that's what we saw. But quite interestingly, we saw very positive trends in the food and the logistics business, growing both in revenues and also profits. Yeah, but I said, like I said, one big, I think, attraction to UACN is the value. There's still a lot of value on the table at about 0.8 times its book value, about 8.5 times PE. From a medium, long-term perspective, it clearly is, I think, a strong
I was about to ask the long-term question.
Yeah.
So do you think Nigerian economy still has what it takes to allow companies to deliver strong earnings moving forward?
It is. This is a short-term blip in my view, and I think the presidency has expressed that. I think we do have a lot of faith that the current administration can clearly turn the economy around with the required investments in infrastructure and, I guess, policy. I do believe that consumption will return, so would spending that would obviously create the opportunities or realize the dreams that a lot of international investors have for Nigeria.
Thank
you very much. It's been a pleasure.
For coming on the program. Yeah. Very short conversation. Wish I could keep it much longer. From Exotic Partners, Head of Research in West Africa, focusing more on consumer goods. Nigeria's biggest listed company, Dangote Cement, says the company aims to nearly double its production capacity over the next 3 years, while half of its output by the end of 2019 will come from Pan-African plants outside its home market. The company, majorly owned by multi-billionaire Aliko Dangote and Africa's biggest cement producer, plans new plants in Nigeria, which will add between 9 and 12 million tons to its existing capacity, and will also expand production into Ivory Coast, Liberia, Mali, Niger, Kenya, and Zimbabwe. Plants in the Republic of Congo and Sierra Leone is expected to become operational later this year. The company, which currently has an annual production capacity of 43.6 million tons, targets output of between 74 million and 77 million tons by the end of 2019. Okay, a thank you note from Zambia's President Edward Lungu to the central bank governor for how he's handled the country's exchange rate turbulence that helped the kwacha currency recover from big losses recorded last year. The Bank of Zambia raised interest rates by 300 basis points to 15.5% last November in a bid to tame inflationary pressures, but left them on hold in February, citing concerns about slowing growth.
The kwacha recouped some of the losses from last year when a sharp slide in copper price hurt Africa's second biggest producer of the commodity. But the currency came under renewed pressure this week after a credit rating downgrade from rating agency Moody's. The president said in a statement that his administration has full confidence in the leadership of the central bank, which is why it allows them the necessary autonomy to execute monetary policy professionally as they can. However, many Lusaka residents say they are yet to feel the effects of a strengthening kwacha.
It hasn't appreciated that much for people to get so excited about it. But for the business world, I think it is, because at least we can see that kwacha is appreciating, and looking at the news that kwacha is one of the currencies, the strong currencies, that can not only go down, but it can actually appreciate in a good way. But the worry comes in where we have kwacha appreciating and prices that were raised still remain the same.
It will positively, bring development to the country, in as a lot of things in this country are imported, and it means the cost of doing business will go down, and commodities on the market, like everything has gone high, cost of living, cost of doing business, and etc.
The government has criticized politicians and analysts who have dismissed the kwacha's recovery as a political gimmick ahead of general elections in August, and says austerity measures introduced last year will be maintained despite the looming vote.
If it is tight monetary policy that is causing the exchange rate to appreciate, then we must be mindful of the fact that that tight monetary policy could very soon have the counterproductive effect of causing more depreciation of the kwacha faster and higher inflation. So this is what is obtaining in the economy today.
According to the Ministry of Finance, Zambia's debt stock was around $6.6 billion at the end of March, a marginal increase from $6.4 billion in December 2015.
We'll be back after the break. Stick around. A new report released this afternoon by EcoBank Research says 3 African countries have seen yields rise significantly on their government bonds: Nigeria, Ghana, and Kenya. In the first 3 months of 2016. In the past 3 months, yields on the sovereign bonds have been rising due to risks relating to foreign exchange and inflation. So let's take a look at the FMDQ OTC Securities Trading for today. I'm now being joined by fixed income trader with Rand Merchant Bank in Nigeria, Ayodeji Oyeniyi, is joining us via Skype. Thank you very much, Ayo. We appreciate your time. Ayodeji, talk to us about yields. Talk to us about the current yields in the marketplace.
Okay, in the treasury bill space, largely we've seen it sell today, and this was triggered by the automobile issuance by the CBN. So earlier in the day, the central bank bought 40 billion over 225-day bills, just to mock the liquidity that came in from the stock distribution, and the range of these was between 9.25 and 10.2, and eventually they sold a sum of 56.1 billion at a rate of 9.5. Now, on back of this, we've seen sell-offs in the market, with treasury bills yield inching up an average of 25 basis points a day, and the same thing has also completed to settle up in the bond space as well. So currently in the T-bill space now, we have a yields ranging from 5% to 11% at the long end in terms of yield. And in the bond space, we have also about 11.5 to 13.2, 13.4% in the space. Similarly, we've seen a sell-off on the back of the liquidity more comprehensively.
Okay, Ayodeji, we thank you for those few comments you've made there. We appreciate that. A bit of a problem with the Skype connections there, a bit of the audio a little bit unstable as well. But summary of what you said was that yields are climbing higher on treasuries and FGN, Nigerian government bonds. Again, the auction being conducted by the central bank in terms of liquidity mop-up. That's the summary of what you've told us. Thank you very much. We'll keep tracking the market. And if you're interested in the Nigerian market, of course you're interested, look at this screen, your TV screen there, and you can see the market's numbers as far as the FGN bonds and treasury bills are concerned. Thanks for watching, everyone. I'll see you again. Bye for now.